resumes, I would probably say that with this kind of a news flow announcement, and we were discussing this yesterday in the
Yes.
morning, that there was a 7,000 open interest built up at a 58,000 put, which is deep in the money. We were at 51,000 on the Bank Nifty just 2 days back, and to have a built up of 58,000 put, which means markets knew something in just 2 days back, and 7,000 put options as an OI converts into a 125 crore position in terms of the premium. So it's not
sizable.
it's a very sizable position to happen for, and to try and take that risk contra to the kind of geopolitical news flow and the expectations of news flow in the last 48 hours. I think that was the critical part for the market. So that, I believe, could probably be one of
So
the
someone will make money today.
lot many people will make money today, I'm sure. But
especially the 58,000
especially the 58,000 put. So I think that was remarkable as a data point specifically. But then I think kudos to the last 2-3 days for the markets, because we've seen a brilliant market breadth. We've seen a fantastic recovery, resilience for the markets. In the last 2 or 3 days, we've seen consistently that the index start to open with a mild gap up. We saw an intraday correction. At one point, we were on the verge of breaching some key short-term supports for the index. But the manner in which we've managed to come back and the second half close onto a positive side, that was quite strong and remarkable. Even though the FI numbers on the cash side is extremely negative, but I think hopefully now that starts to change. You've seen a build-up of long positions on the index open interest. So maybe that could be a positive part which we can look at in terms of the data points. But yeah, I think with the sector approach, with the market stabilizing, the news flow being a lot more better, I think there should be more room for the index to head up higher.
So Kunal, sectorally, do you play something, or do you play the index today, because that's where the meaningful move would come in?
No, so I think index is the first leg, but now, so there are a lot many factors. So what took the markets down, because of the crude oil prices, the OMCs, the oil-related companies, they are the ones which will first get a leg up. So I think one could probably try and play that as a sector. Once the market takes away that short covering move, is where once stability comes in, you look at financials, you look at banking, look at PSU banking names, back to the basics.
Yeah.
And I think that's where. So even if today you try and take the second leg opportunity where you're trying to bank on the financials and the realty names, etc., that will still be a very good bet, because now you're looking to eye the trend. So it depends on what you're looking at. If you're looking at this as a very short term, like an immediate basis, you want to try and maybe capture as much as possible. You might want to play the oil sensitives. But the second half, I think, is where when normalcy resumes, you will see the usual trend, particulars, the financials, the realty, the high beta stocks, the metals, etc. They'll try and come back into show.
So can you say with conviction that we've bottomed out?
Yes, short-term wise, yes. We've bottomed out for I think, good.
Ah, okay. On that note, any specific stocks, Kunal, that you are looking to trade and recommend?
So a mix of both, the kind of strategies which I mentioned. On the banking side, I would look at now ICICI Bank as a potential, breakout candidate. Yes, the stock has been one of the few laggards in terms of the private sector banking stocks, but I would sense that from here till the next maybe a couple of weeks, you might expect that many of these banking names would make a dramatic comeback. So ICICI Bank is something which I'd recommend in that perspective. Buy with a target of 1300, more on the slight, short-term side to positional perspective. Stop loss to be kept at 1225. The second would be a buy on oil sensitives, and that's Hindustan Petroleum. Again, many of these OMCs have fallen more than 25 to 30% in the last 1.5-2 months. So expecting a very strong short covering into these names. Would suggest the one HPCL with an immediate target of 350. Stop loss to be kept at 320.